Hi everyone, a big warm welcome to today's Monday market update. Let's crack straight in because I see the market is moving. I just filmed the Mastermind Monday market update before the movement happened, and looks like what we were discussing is actually playing out. So we'll get to the chart in a sec, which is just fantastic. Now, this is why I'm a little bit, I don't want to say bearish, but cautious about the coming week. That's not true. I am bearish, but broadly, I'm cautious. So if you are not sure what's coming, if you are uncertain about the massive noise that is coming, sit this one out. Take your risk off the table. Wait for more information. Wait for more data. But this tweet by Cantor and Clark summed everything up, so I want to show you it. Should be a really exciting week for short-term trading opportunities. Plenty of catalysts for things to get slippery in both directions. So bulls and bears are going to get wrecked in the short term no matter what, because we are coming to the pivot point. We're coming to that's a pun unintended. We're coming to a point in the market where we're going to see, and the chain of events are going to happen over the next 6 to 12 months. Pause, pivot, pause, then pivot, then liquidity injection. And then the recession is going to happen between that. They need to have cutting interest rates. There needs to be very clear information that the recession is here and happening. That, in my eyes, is actually starting to filter in now. So we're going to be very, very attuned to what's going to happen in this shorter term moment, because this week we have, Secretary of Treasury Janet Yellen coming out and having a conversation with certain people. So we're going to get more information there, or maybe no information whatsoever. Sometimes there is signal in the noise. PMIs coming out as well. This is the important one though, FOMC. This is where the Fed will decide whether they raise another 0.25 or they pause. So very, very interesting start to May rather, that we're going to see coming up. And then non-farm payrolls, Apple earnings as well. We should either, keep the stock market high or, have a little bit of a drop. So a ton of stuff going on, but it is going to give us a real insight in the direction of the market coming. My thinking as well is, because we're always looking forward, these last few months have essentially been pricing in the pause, where markets have always rallied into the pause and then had a massive crash or a pullback on the pivot. So when are we actually going to start pricing in the bad news? When are we going to start pricing in the recession? Is that going to happen this month? And I suspect it might come. So that's my feeling this week. I think we need to be very, very careful. And I think after seeing Bitcoin just ram its head into 30,000, bang, 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 even this morning we're $1 off. It just feels like we're due for a big correction, especially into a week like this. We feel it feels like we're low on liquidity and we're due for that big, contraction into May the 4th FOMC, and we really will ride from it there. Now, what we were noticing, Joe and myself, in our discussion earlier in the week, is how Bitcoin and whatnot, we're going into this rising channel over here, and I've deleted them now, but it was going up here all this time, and then it finally broke down, around about this area here, fell over into here, had a bit of a rebound, but lower highs couldn't crack back above where it was previously, and that's a bit of an indicator that it's running out of strength. RSI also falling away. Then we're starting to look at, well, where's this possibly going? And it's looking like it's contracting into a descending triangle. You can see the top of the trend line here. You can move it up a little bit, potentially like that. So you got bang, 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 but I prefer how I had it before when the touches were there as well. And then there, it doesn't really matter. It's a bit of semantics. But coming in here, this is exactly what I think is going to play out. And it looks like this has started to fall over because the RSI, so momentum's just falling away for bulls up here. So you had 1, 2, 3, price action just going sideways. People just waiting that we're probably going to have a positive May the 4th FOMC. But we all know that it's front run so often that we generally have that contraction and a fall into here. So I think 27, 26, 500 is absolutely on the cards. Yes, we could go back down to the 200-week moving average, but again, that might be a little bit of a bridge too far, but that would scare out a ton of people. But it actually got down in that area and had a big bounce. Now, I'll bring back a bit of a fractal, because I want to show you what happened over here before we had, so running up into 25,000, the 200-week moving average is dotted yellow line here, bang, 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 3 peaks, 1, 2, 3. That's before we had that big gulp where everyone was holding their breath back to 20,000. We hit the 200-day moving average on the nose before we ran up to 30K. So very much up. So then this is a stepping stone before we move up to the next high, but just circling that there. So remember what you're seeing here, 1, 2, 3 peaks, and then the rollover. What's happening over here? And I just showed you before, 1, 2, 3. rollover. So for mine, I think we're going to have that big gulp down somewhere in this area here before we move above 30,000, because we're going to need to get through this shorter term noise. And again, this for a longer term investor, all this is just noise. You're positioning for the next 6 to 12 months. So if you're not shorter term trading this, don't. And if you're not an experienced trader, don't. Sit this one out and wait for all the chips to fall where they may, because this is going to be very, very difficult to read unless you are bang on watching what's going on in the market every second of every day. Now, I'll just quickly show you something like Litecoin as well, which has been doing really well, down to 86, so perfect. It's falling right into that zone, which we've been sharing with our masterminds, because this just seemed like it had kind of done its dash a little bit and run out of steam. And very similar to Bitcoin, a lot of these altcoins are moving into these descending triangles, or at least this lower high trend. So high, lower high, and you can say here lower high. But Litecoin here, if you have a look, and this is the 4 hour, so it's giving me a bit of shorter term signal for mine. It's under all 4 key moving averages: the 20, the 100, the 50, the 200. So bang, 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 bang. And it was just running into that resistance, falling back in here beautifully into this box where I thought it might go rather. But these are really the areas. Bitcoin continues to fall over, and it sure looks like it might. 85 is absolutely on the cards. Then you've got the Fibonacci level, 0.618, 82. Then you got 75 as well. I don't know if it gets that low, because Litecoin's been showing a lot of relative strength. But a lot of these altcoins have been running on, again, a lot of steam and low liquidity. If they start dumping, we're going to see a pretty big vicious move to the downside where they flush out before the next move high. So please be aware of how volatile this market is, especially on low liquidity. Let's have a quick look at Ethereum. Yeah, just dropping beautifully into that volume pocket. Its next level is looking pretty ripe as well, 1744. So it's all based on the closes. Very clear, but that looks like an inverse, a head and shoulders pattern, which should resolve itself to the downside. So a lot of things in play here, but I'd say the bull's in the bear's court. Unless we get some majorly positive news from the Fed, they're pausing, they're not going to pivot right away and all that, and just forestalling things a bit longer, and I think markets really rally. But we've got a couple of days here, and I think now we're going to price in either a rate rise or potentially the bad news of the closing recession that's coming in pretty quick. So again, guys, it's a bit speculative and high and mighty, but just keep things really, really simple. This week's going to be a tumultuous week of data. We've had a really good run of it. So, we're under resistance. That's the best thing I can just point to. We're still under resistance. If we're above resistance and flipped it to support, then you can maybe make the case that Bitcoin was going to bounce here and go higher. But I'm just not seeing it. The probabilities in my eyes are that altcoins are going to get a bit of a bushwhack here, and Bitcoin's going to have a grind lower. So just keep that in mind. Now, I wanted to share key on-chain data here. Bitcoin plebs are now buying more than the entire mining subsidy every single month. So this is really great news. Those smaller investors, those smaller holders are just eating the Bitcoin supply, in fact, more than the miners are distributing onto the market. So really, really positive there. However, this does mean that if there's a big movement in the markets as well, that the smaller holders are doing a lot of the heavy lifting. So there's not that big institutional sort of buying output. And again, you can't really tell that from this, but from other metrics I'm watching is that institutions aren't dipping their toes too hard here right now. MicroStrategy is doing their thing, but broadly, large buyers are not eating the supply as we've seen in bull markets. So it just shows you again, we're not there yet. We're not in a bull market. This is going to be a choppy ass year. Where, like we saw at 25,000, be ripped back down to 20, rip up to 30, probably rip back down to 24, 25, rip up to 40, rip back down to 30. So it needs to slowly build, and then we've got the halving, which will be priced in eventually towards the back end of this year, or at least it will start to be priced into the back end of this year. So let's just need to keep that in mind. All right, to our course members, if you're a client of ours and you've completed our course, or you're currently completing our course, please remember that we are constantly doing updates to the content, and I have completely redesigned our trading module. So this isn't just about trading as such, shorter term trading and all that. This is more about getting used to trading views, the UI, what the indicators mean, how to position yourself as a longer term investor using the website, using the different tools at your disposal. I'm just going to go into all of that. So far, I've updated the trading view walkthrough, moving averages, Fibonacci, Fib extensions, trend lines, and horizontals. I'm going to be adding another 3, 4, potentially 5 in there this week. We're going to have to see how time permits. but it has been incredibly busy on my end. But I'm looking to get these all done because the last one's incredibly old and they needed to face this, they needed to touch up to where we are currently. So guys, thank you for being patient with that. We're going to really enjoy getting this out to you because, again, it needed doing. So have a great day and stay tuned for that. I'll let you know in the groups. And if you are not a client of ours, please have a look at this, look at our reviews. If you want to get that foundational course knowledge, that foundational education that you need in this market through fundamental analysis, technical analysis, macro analysis, all of that, we're there. We're here to help you, and we're one of the best in the business. So get on to it. We'll catch you again next time. See you guys. Bye.